Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And talk about the data today, the economic data. I was looking at it, and retail sales was up 6%, which was below the consensus. The consensus was 8%. Had a very poor reading last week, which was negative 1.1%. Or let me see what it was. But it was pretty weak. The retail sales, and yeah, it was negative 1.1. I've heard it was revised up or revised down, but I don't see anything about that. And the big thing is the PPI, the Producer Price Index, inflation. That came in much hotter than expected, 6%. The consensus was 3% for the month. And even for the year, it was at 3%. Not for the... core PPI was 3%, and it was supposed to be 2%. So year over year, it was 1.9, but it was 2%. That's what it came in. That was the consensus. So much higher than expected. And that's the thing. Cost of food, cost of energy, cost of shelter, everything's going up. So the only way, and think of it, property values, leases, those are based off property values, property taxes. So those are a cost of everything. The only way to stop inflation is to crash asset prices. And this is why I say, the Fed is trapped. They either have to let inflation run rampant, and then, the markets are going to crash anyway. Or you have to let asset prices fall. And the other thing, too, is this is going to spike up interest rates and cause even more. Because I was looking at the 10-year, and around 8 o'clock, it was at 4.19, and it finished today. So it was up 10 points, or 0.10, 0.1. So it went up from 4.19% to 4.29%. So the Treasury, the 10-year yield, that went down. So if you look at it, this isn't looking very good. And the Fed's supposed to cut rates. So imagine how bad inflation is going to be if you cut rates instead of raising them. Normally, when you have inflation like this, you have to raise rates. But they're not doing that. And the markets, they finished down on the day. Gold finished down on the day. I do think we're going to get to a point where high inflation numbers are going to lead to higher gold prices and higher mining. But that's not there yet because the markets are still under this illusion that the Fed's going to be able to hike much more or tackle inflation, but they can't. The U.S. is broke, and the upper middle class, if they fight inflation, they will go broke because you're going to crash the housing market and crash the equity market, and that's where most of their wealth is. So the Fed is trapped, and inflation, it's not transitory, it's permanent. And that's the thing. I do think deflation's coming, but over the next year or two, inflation's going to get really bad. And the Feds has to fight hard and fight very hard. And they have to Volcker it. And it looks like Jerome Powell is Arthur Burns and not Paul Volcker. So, yeah, that's all I have to say is inflation. It's here to stay. And the other thing I wanted to look at was Janet Yellen. I was trying to look at this article. I'm going to try to find it. I'm going to try to find it. I'm not going to look it up as I'm doing this because I don't have much more to say. It said, I regret saying that inflation's transitory. What a liar. She doesn't regret saying it. The reason she said it was transitory wasn't any reason that the common person would know. I still remember gold was looking to break out, move, and then all of a sudden she said, we believe inflation's transitory, it's not. And then all of a sudden, gold price smacks, the market smacks down, The market goes up, stocks go up, bonds go up. It was a pure market manipulation. She did not say it for political reasons or to gain voters or to the donors. It was a systematic takedown of the gold price to try to knock the gold price down. And that's why she said it. And she doesn't regret it. She just is upset that the press isn't running cover for her. So, anyway, hit that like button, subscribe if you already haven't, and I will see you next video.